Mastering Bookkeeping Basics, Debits and Credits. For every action, there is an equal and opposite reaction. Actually, there's really nothing difficult about debits and credits. It's just our method used to record business transactions. Stop right here. You're not going to start teaching physics, are you? No. But accounting and bookkeeping have a similar rule. Accounting and bookkeeping's similar rule is debits equal credits, or for every debit, there is a credit. This rule is the basis for the double-entry bookkeeping system. If you recall, the double-entry system is an accounting system that requires at least 2 entries to record a financial transaction. What enables the double-entry accounting system to work? In 2 words, debits and credits. Let's define the terms. Debit. An entry, amount, entered on the left side column of a journal or general ledger account that increases an asset, dividend, draw, or an expense account, or an entry that decreases a liability, owner's equity, capital, or revenue account. Credit an entry, amount, entered on the right side column of a journal or general ledger account that increases a liability, owner's equity, capital, or revenue account, or an entry that decreases an asset, dividend, draw, or an expense account. Did you notice in the definitions that a debit can represent an increase or a decrease? Likewise, a credit can represent an increase or a decrease. It all depends on the type of account. Let's discuss debit and credit rules. Changes to debit balance accounts. All accounts that normally contain a debit balance. Normal debit balance accounts will increase in amount when a debit left column is added to them, and reduced when a credit right column is added to them. The types of accounts that normally have a debit balance to which this rule applies to are expenses, assets, and draws dividends. Changes to credit balance accounts. All accounts that normally contain a credit balance, normal credit balance accounts will increase in amount when a credit right column is added to them, and reduced when a debit left column is added to them. The types of accounts that normally have a credit balance to which this rule applies are liabilities, revenues, and equity. What is an account's normal balance? The normal balance is the debit or credit balance that an account is expected to have. The normal balance is also the side of the account that increases the balance of the account. Let's use the debit and credit equation as an aid in understanding debits and credits. The debit and credit equation is derived from the fully expanded accounting equation. Assets plus draws, dividends, plus expenses equals liabilities, plus owner's equity, plus revenue. Normal debit balances equal normal credit balances. Debit balance accounts equal credit balance accounts. In this equation, all the normal debit balance accounts are on the left side of the equal sign, and all the normal credit balance accounts are on the right side of the equal side. Next, let's find out when to debit and credit, and yes, you'll understand before pigs fly. Debit or credit, when? What to debit or credit, or as William Shakespeare might have said, to debit or credit, that is the question. How to use and apply the debit and credit rules. One, determine the types of accounts the transactions affect. Asset, liability, owner's equity, revenue, expense, or draw dividend account. 2, determine the account's normal balance. 3, determine if the transaction increases or decreases the account's balance. 4, apply the debit and credit rules based on the type of account, its normal balance, and whether the balance of the account will increase or decrease. In the old days, manual bookkeeping systems, mastering debits and credits was an absolute necessity. Nowadays, with the advent of computerized bookkeeping and accounting, the software using modules automatically handles this task. Does this mean you don't need to understand debits and credits? Only in your dreams. Although an airplane can be flown on autopilot, would you want to be on that plane without a trained pilot? The same applies to using accounting and bookkeeping software. You need a properly trained bookkeeper or accountant that is also familiar with the software product in order to properly use the software. That old saying, garbage in, garbage out, definitely applies here. Let's summarize what we hopefully learned about debits and credits using my debit and credit table. The table lists the type of account, the account's normal balance, whether a debit or credit increases the account's balance, and whether a debit or credit decreases the account's balance. Okay, class, that does it. See you in the next session.